Good morning and welcome to this Wednesday, November 20th edition of Trading Places Live here at EarningsBeats.com. I'm Tom Bowley, Chief Market Strategist at EarningsBeats.com, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. I do want to mention a couple of things before we get started today. Number one, if you haven't already signed up, you should sign up for Market Vision 2020. We just announced speakers. A lot of my good friends at Stock Charts will be joining us on Saturday, January 4th. They'll be giving you their thoughts as to the upcoming year. I have tremendous amount of respect for a lot of these speakers and their ability to see things unfold before they unfold. And so I think it would be worthwhile for everyone to come to the event. But there's going to be a lot of stuff leading up to the event. Free giveaways. There are going to be mini-series educational events with several of the speakers that you're not going to want to miss. So make sure that you go to EarningsBeats.com, and at the top there will be a tab that says Market Vision 2020. Click on it and register. It's really important to register if you haven't already, because that is how you're going to get the information. That is how you're going to get the giveaways. That's how you're going to get the link to the room in order to attend these mini series events, these educational events. They're going to be free. Everything leading up to the event is going to be free. The event, of course, will not be free, but we will certainly make best efforts to give you a tremendous value, tremendous price as we go forward. And that's another thing. You'll need to be registered in order to get that pricing. So make sure you go to EarningsBeats.com, EarningsBeats.com, and then go to the top, the tab Market Vision 2020. There you can see it on the screen, and click on that, and right there you'll see the sign up. So all you have to do is put in your name, email, and click submit, and from there on we'll be sending you information. Definitely sign up. I can't stress that enough. Very important to sign up. Also, last night had the quarterly stock picks, my top 10 stocks for each portfolio. Even added a new portfolio. So now we have the model portfolio, the aggressive portfolio, the income portfolio, and now the value portfolio. 10 leading stocks for each of those different portfolios, 40 different stocks. Really important to follow relative strength. I actually wrote in my blog article this morning, I thought it was important to point out relative strength and what it has meant in terms of developing these portfolios. And so I just wanted to show you, and I will do that now. Over here, you can see creating a portfolio to trounce the S&P 500. If you haven't already read the article, or if you're new to relative strength or you're new to earnings beats, I would highly recommend you go in and take a look at this. But essentially, you know, this isn't rocket science. It's just simply every 90 days putting together a portfolio of industry group leaders. And here are the results. You can see over the last year, model portfolio up 47%. The S&P 500 up less than 16% over that same period. Now, were there bad periods? Of course. I don't know anyone who outperforms the market every single day, every week, every month, every quarter, or even every year. But I think the results do speak for themselves. That's huge outperformance over the course of 1 year. Part of it, we benefited from growth stocks being in favor most of the year. You can see growth outperforming value. That was really important because most of these stocks in these portfolios are growth stocks. The last quarter was challenging, but you can see on this ratio here that the value stocks started leading. Growth underperformed, which is why this ratio went down. But when we started to rally again toward the end, you can see the model began to pick back up again. Significant outperformance here relative to the S&P 500 over the past week and a half or so. Anyhow, just wanted to point that out. If you are a member of EarningsBeats.com, we will send you that recording, or we'll give you instructions on how you can take a look at that recording. Last night was selection, it turned out to be Selection Tuesday. But again, every 90 days, every 3 months, we do this. So a new, fresh list of stocks went into each of these 4 portfolios, and they are designed to be held the entire period. We don't have stops. We don't replace the stocks. We don't wait until, if they're overbought, we don't wait for them to come back down so the RSI gets to a certain level. We put them in as of the close on the 19th, and we get rid of them the close on February 19th. That's how they work. Very simple strategy, but it's been a tremendous performer. All right, now let's get on to what we need to talk about today, which is yesterday's action to start off. You can see the Dow Jones Industrial Average down 100 points. We haven't seen a day like that in a while. Certainly the market could use a little bit of a pullback. We're overbought. You can see down here on the RSI, Dow Jones for the first time in a while went into overbought territory, and we're seeing that in the S&P 500 and the NASDAQ as well. Only the small caps, you can see, never really moved into overbought territory, but all of our major indices, well, 3 of our major indices, all right, let's try this again. 2 of our major indices went down yesterday. The Dow was the biggest one. S&P 500 really not much considering what we've gone, you know, how much we've gone up over the past 6-7 weeks. The NASDAQ actually did finish in positive territory. It was down earlier, but it did come back and rebound as we've seen so often. And look at the boring action as we move higher here. This is so typical of bull market advances. We're not in this back and forth yo-yo, up 300 on the Dow, down 250 kind of a scenario. Now it's we're up 30, we're up 50, we're up 110, we're down 12, we're up 60. I mean, that's the kind of boring act. You're sitting there saying, well, I don't want to get in now. I don't want to get spin up so much. And it just doesn't give you a whole lot of opportunities to get in. I would be using any weakness whatsoever if I had cash on the sidelines. I believe the market's going higher. We shall see. 10-year Treasury yield. This continues to fall, and I'm going to look at this in just a second. I'm kind of surprised we went right back through the 20-day moving average. I think what's going to happen, though, is if the Treasury yields continue dropping, the 10-year Treasury yield continues dropping, the difference between now and where we were, say, 10 years ago or 11 years ago, is that when the Treasury yield would drop back then, the money that fueled the Treasury purchases was coming from the stock market. The difference now is that money is not leaving the stock market. Even when we have these pullbacks in the yield, that means money's rotating into Treasuries. The NASDAQ's going higher, maybe at a slower pace. The S&P 500 is going higher. The Dow's going higher. If we keep moving down here, I suspect that we'll see some selling and consolidation as opposed to a big sell-off. In 2007, 2008, when we would get a big drop in the yield, the stock market would crater. That's a big difference because the money is not coming from the stock market. It's new money coming in. Maybe it's a little bit of rotation back and forth, but the bull market in stocks is alive and kicking. The sectors yesterday, you can see healthcare had another really nice day. This has been a strong group, rising from under 88 the beginning of October to touching 98 yesterday. That's a big move in an ETF over 6-7 weeks. So we've got healthcare really rolling along. Energy continuing to lag. Crude oil prices this morning are up a little bit, though, so maybe we'll see a little bit of a trend line kick save here. I want to see a reversing candle, and then maybe we'll see energy lead for a bit. Discretionary stocks. Notice discretionary stocks not making the breakout these past couple months, even though the S&P, NASDAQ, everything else is. Discretionary on a relative basis not performing well right now at all. Yesterday was another rough day. Only down, $1.34, 1%. You don't think it's that much. But when you look, it just hasn't participated really to the upside. Within the discretionary space, you can see home improvements taking a hit yesterday. Home Depot came out, really not a very good report, and the market reacted. Home improvement stocks moving down to a low we hadn't seen probably in about 5 weeks or so. On the other side, the flip side, leading healthcare, Biotechs. Another huge rally in Biotechs. We're going to look at that in just a moment. I do want to mention at 2 o'clock this afternoon, the FOMC minutes come out. So you might want to take a look at that just to see if there are any new looks. It'll kind of just go over the last Fed meeting, telling us, what the Fed talked about, what they thought. Sometimes it provides us a little bit more detail. I think the Fed has completely turned, and I think that's one of the biggest changes in 2019. When you look at where we were at the beginning of the year to where we are now, it's not just the market's gone up. I think the Fed has made an abrupt change in 2019. They went, if you remember back at the beginning of the year, all they kept talking about were rate hikes. Look at where we are now after cutting a few times and the Fed continuing to remain, I think, somewhat dovish. I think that's a complete turnaround from where we were a year ago. And I think the market's reacted to that. All right, let's take a look at the 10-year Treasury yield. I mentioned this yesterday over at Stock Charts during my Trading Places Live there. But if you didn't see that show, I just want to point out that we were up against a really significant resistance area on the 10-year Treasury yield. And if this breaks, I think this would be a tremendous signal for the bull market in equities, because this would be a significant change. We're pulling back right now, but if we turn back to the upside and go up and take out 1.95, 1.96% with gusto, that's going to signal, in my opinion, a very significant shift from treasuries to equities. So you definitely want to be on the lookout for that. I think that also would coincide with very strong action in transports, small caps, financials, and some of those areas, industrials. But right now, we've got short-term issues to deal with. And what I was looking at this morning was where we might go now with this moving down. And so I was looking at maybe a trend line there. I think clearly we have a little gap support and recent low right here. So I think the first test, if we go below the 50-day, would be maybe down around 166. And then this trend line would come in at 160. And if we end up going all the way back down in the 140s, 150, then I think we will probably be looking at S&P 500 that is no longer at all-time highs. I think that would spook the market. And it likely, a lot of what's being pinned on this drop today, and we are down about almost 4 basis points today, 1.75. A lot of this is being pinned on just more trade uncertainty. I mean, let's just get over this. I mean, I understand it's a big deal, but the market is trying to look past it. I think the market is basically telling us that we're going to get a deal, that a lot of the fears, I'm not going to say they were overblown, but I think they're behind us. And so I believe we're going to see this 10-year Treasury yield turn back up again. The fact that the S&P has not been going down, I think, is one indication. But we shall see. It is on a downtrend now, and we do need to see that reverse. All right, next up, I want to take a look at Home Depot. Yesterday, their earnings not good. You can see the reaction here. I had suggested yesterday we'd probably open somewhere around 230, and then we'd need to see where Home Depot went from there. Well, we opened at 230.60, and I think it's pretty clear where we went from there, and you can look at the volume. Not a good number, not a good reaction. You can see the relative weakness beginning to take a toll here on the stock. So where would I be looking on Home Depot at this point? Well, there was a pretty big breakout right here. And I also think with earnings back in August, that gap up was right there. I think we're going to head on Home Depot back into this range. From there, hard to say, where we might go. Let me show you one other thing here. Whoops, I didn't want that. Maybe if we take these last couple of lows and connect these, we can see that comes in maybe around 220. I wouldn't be surprised to see us go to 220 and then consolidate. If we drop below that level, then I would be looking at this gap support. Below that would probably not be a very good look on this chart, because there were a lot of buyers that came in around 212 on that earnings gap. So we wouldn't want to lose that support level. But really not looking at this stock. They did not. I tend to trade. Well, I don't tend to trade. I generally trade. I do trade stocks that beat top and bottom lines. So Home Depot did not do that. They're not going to be on our strong earnings chart list. So it's not a stock that I personally would trade. I just wanted to give some support levels for any of you who are looking to trade it or maybe own it. I'd be watching those levels I provided. Next up, let's take a look at the home improvement group as a whole. Hold on one second. You can see Home Depot definitely have an impact on the overall group, as you would expect. We did move down a couple of key levels here. This gets back to this gap and support down around 447, 450. I would be looking for that, see if it holds. We did have Lowe's come out this morning. I was going to get into that with earnings, but I'll go ahead and show you that right now. So another home improvement retailer, another big one, Lowe's, reported they missed on their top line, but they beat on their bottom line, $1.41 versus $1.35, and they guided fiscal year 20 earnings per share higher. So Lowe's, I'm going to pull up also the reaction. But on the chart, you can see this one was actually, it went down in sympathy with Home Depot. On its relative chart, it had been a laggard, but with yesterday's move, notice while Home Depot is moving down relative to the home improvement group, Lowe's is actually moving up. And we did clear about a 6-month relative high. And now we are looking at an earnings report that came in, I would certainly say better than expected, given that they've raised their forecast for earnings per share. Stock right now up 4.7% in pre-market. It's 118.24, which would be a breakout above these prior highs. So Home Depot heading in one direction to the downside. Now it looks like maybe Lowe's is the company of those two that you would want to consider trading going forward, at least I would say for the next month, several weeks. Next up, let's see what else we've got for this morning. I wanted to show you a few charts. Let's start with the Biotechs. I've been talking a lot about the Biotechs, and for good reason. Huge move, another big rally yesterday, up 1.25%, 2077. So if you were looking back, say, over the past few years, let's just say the last couple years, and you were wondering whether or not we could clear this area around 2050, 2060, well, we did it with gusto yesterday. Look at the volume coming in to support that move. I think biotechs are an area we absolutely want to be focused on here in the near term until they tell us that we shouldn't be focused on. This is a group that moves incredibly fast in both directions. You can see the big drops here, but if we pull up a longer term weekly, actually I'll give you the monthly chart. Look at this move over 3 or 4 years. Now I know biotechs haven't really been in favor for the past 4 years, but these 4 years it went from 500 to 2200. So we're talking about a 400% rise or 300% rise in just 3.5 years. If we break out of this consolidation, 2200 is going to be a major level on this index. If it breaks out, I see a measurement to 2900. We did include a couple of biotechs in our portfolios last night, and I think with good reason. I think this is a group that could be leading the market going forward. One other thing I wanted to point out with the biotechs, we're going to put it relative to the S&P 500. And we'll do daily, but let's get rid of the candlesticks. And let's go back 10 years. So here is the relative strength. And you can see during those 3, 4, 5 years, very nice action in biotechs. Now, over the last 4 years, we've been downtrending. Is this the bottom? I don't know. We got a double bottom in. We're now trending on this daily chart above our 20-day, which is above the 50. That hasn't happened really since back at the beginning of 2019. So we're showing more strength really than we have at any point during 2019, except maybe right at the beginning of the year. So this is a pretty good time to be in the biotechs. We'll see whether or not they can continue. I would certainly try to find the leaders in the group. That way, if the market turns back down, if biotechs turn back down, you're in the leaders, that may help save you some on the downside. And obviously, if it continues moving higher, I would expect those leaders to continue to lead. Another group that I wanted to bring up, and I don't know that we need 10 years, but take a look at the specialty finance group. So specialty finance, I mean, once you go through these periods once in a while where you pull back, huge move up, pull back here for a few months, and then make this breakout, break that downtrend line, keep moving. Here we've been moving up, pulling back for a few months. It looks like we might be breaking this downtrend line here on the specialty finance group. So we want to watch this pretty closely. All right, what else do we have here? Well, let's go ahead and move into those earnings. I talked about Lowe's. Great report out of Target. They did miss on their top line, but they raised their forecast. They crushed the bottom line number. So let's pull up Target, get into this relative chart. And this is one of the leaders. We shouldn't be surprised by the big report that Target just had. This is a company that's been outperforming its broadline retail peers and continues to do so. Today, the stock up 9.78%. It's up almost $11, $121.72. Huge move up. So it's just another continuation gap in this uptrend for Target. Target showed that relative leadership back in August. Huge breakout today. I think Target continues to go higher. A really nice leader in the broadline retail space. Now, the problem is broadline retail. If broadline retail would ever get going and more money started coming into the group, imagine what that would do for a company like Target, which is already doing well, even though the money is rotating away from its group. All right, Urban Outfitters last night reported earnings. They missed on their top line. They missed on their bottom line. And right now in pre-market trading, they're down 16%, down $4.59 to $24.20. So we're going to open somewhere down in here. Looking at it, I mean, you can see this is a stock that had been under pressure for quite a while. It was showing a little bit of relative strength of late. And volume trends, to be quite honest, weren't that bad. But it looks for sure like the overall downtrend is going to resume. And I'm talking about the overall absolute downtrend and also this relative downtrend. All right, let's see. There was one other earnings out, PDD. This is Pinduoduo. Stock had been a pretty good performer. You can see versus the internet's rising, pulling back just recently. Volume trends overall pretty good. The stock did come in better than expected. 11-cent loss versus 28 is what I'm showing. Not sure if I got that backwards. Let me see what the reaction is here. I was thinking that they had missed. Yeah, that must have, I think I got that backwards. I'd have to go back and double check that. But PDD is down 23% today, down $9 to $31.40. So we're talking about all the way down here. We'll see whether or not this double bottom holds. Then you got gap support. Kind of surprised. This is one, the internet's hadn't been, on fire, but this is a stock relative to the S&P and relative to the internet space that had been very strong. And I don't see any kind of major distribution, maybe a little bit here the last couple of weeks, but not a lot. We did see a little deterioration in relative strength, but I think this one caught a lot of Wall Street by surprise, and Wall Street doesn't like surprises. So if I'm right and I got those numbers mixed up, if PDD actually did come in and miss and getting this kind of reaction, I think it could be a while before a company like this recovers. Wall Street has a pretty long memory when it comes to not providing them good information leading up to an earnings report. All right, I think that's it for earnings. I do, in today's EarningsBeats Digest newsletter, and that's a free newsletter, by the way, so definitely go into our site and sign up for that. You'll see free newsletter at the top. Go into earningsbeats.com, sign up for that. But one of the things that I pointed out, and this company reports after the bell today, L Brands. Look, it's in a downtrend. I had written about this one back in August in the newsletter. Apparel retailers not performing very well back then. LB relative to its group was going straight down near a 52-week low at the time. And there was earnings. It gapped down, kept moving lower, eventually went back, filled this gap, and has since moved back down again. And this comes during a period when retail apparels or apparel retailers have actually been going higher. So this is a tremendous underperformance, relative weakness that we've been seeing on LB. They report after the bell today, and unless they got a big secret that they're keeping from Wall Street, I suspect it's going to be more of the same. So LB will be one to watch after the bell today. All right, upgrades and downgrades. Let's take a look at CGC first, see if we agree or disagree with these. CGC downtrending. The upgrade, I like it maybe short term because of that bullish engulfing candle. We might get a short term rally. I think if you get anywhere up into this gap resistance zone, though, I'd be a little careful. One stock that was downgraded today is Sherwin-Williams, SHW. Stock's been moving up, really strong relative strength. I don't agree with this downgrade. I think it'll probably be an opportunity. All right, one thing I wanted to point out today before I get into the three you must see is momentum sleepers. And one of the ways that I would consider looking at momentum sleepers is starting with our strong earnings chart list and simply going in, hitting the summary. Let me show you how you do this from the start here. Let's just say I'm in a stock and I go into my strong earnings chart list. Then I click on the view all, come over here, hit summary, change this to a 1 month look. And then there you go. Over the last month, these are the stocks in the strong earnings chart list. These are all companies that beat Wall Street estimates as to both revenues and earnings in their last report. This is how they've performed over the last month. So likely many of these are momentum sleepers. They've been stocks that have performed well in the past, but are not performing well right now. So if you were looking for maybe something that's pulled back, this would be one way to do it. And you can change this. You can say, okay, what's been rough over the last week? And you can see those and perhaps go back and take a look there. All right, so that's one way to maybe check out some momentum sleepers. Let's go ahead and get into the three you must see. The first one, and I'll tell you, some of these stocks have really made some moves to the upside. AMD, I know it wasn't that long ago. I was pointing out, and I wish that we had put it out as an alert, but AMD came right down to the support level. I know it's been in the daily market report on a couple of occasions, but it has been a huge rally on AMD. We know semiconductors have been hot, but look at this move from 28 to yesterday's close at 41.29. And I remember, I think it was in one of the DMRs I talked about when it was starting to show strength. I said, when AMD goes, it can go really fast. And here we go. I mean, it's been 6 weeks, and it has been a tremendous run higher. 50%, almost 50% in what, maybe 5 weeks? That's a pretty good move. So that is certainly one you must see. Now, it's not one that I must buy after the huge move up. Look at the RSI now at 88. I would never buy a stock with an RSI at 88. That is crazy. Rarely do you even see 88 on the RSI. If you know how the RSI is calculated, basically you have to go up almost every day for 14 days to get a RSI up that high. And that's basically what this stock has done. It's had only a couple of little minor days to the downside. All right, so that's stock number one. Let's take a look at stock number two. Mentioned the Biotechs earlier. Let's take a look at Ardelyx. I don't know, I'm probably butchering the name. Ardelyx. When we look at, talked about leaders, well, here's a stock that's breaking out on its absolute chart. Nice uptrend, looks like a cup, sideways handle, and then a breakout. No doubt this is an incredibly volatile stock. I would not suggest this for anybody who has a low risk tolerance. This is going to be a very risky play, but you can see how fast it moves. So the fact that it's making a breakout and it is a leader in the biotechs, which are moving, just wanted to point it out. I thought this was worthy of a mention. And then the last one, I get a question sometimes. I'm talking about what it means when I say that I want to see something confirmed by volume. Well, here, if you look at this stock, we went up, we set a top on EIDX. This is another biotech stock, by the way. Came back up, hit it again. So we got an uptrend, got a nice cup, handle back to the 20-day. And then a lot of times I'll say, I want to see a breakout of the cup with confirming volume. Well, here, as you can see, the breakout above this cup, right here on this day, look at the volume pickup. You see how much heavier the volume is there versus any of the other days? That, to me, is what I mean by confirming volume. This actually from 50 down to the bottom of the cup at 33 is 17 points. This measures up to 67. If it were to pull back a couple of days and get back close to that 50 level, again, it's a very, very risky stock, but I like the reward to risk if it gets back down into the lower 50s because, again, the measurement is up to 67 in time. All right, that is it for the three you must see. That's it for the show. Again, go to earningsbeats.com, check out Market Vision 2020 and our free newsletter. Wishing everybody a great day, and see you back here on Trading Places Live at EarningsBeats next Monday. Have a great day, everybody. Happy trading.